Looking for some great long-term investment opportunities? Like the idea of collecting safe, growing, passive dividend income while your wealth exponentially increases? Want to know my top 5 stocks for August 2021? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel. I'd really appreciate it. Dividend growth investing is the gift that keeps on giving, except it doesn't just give more gifts. The gifts it gives grow in number. Indeed, many high-quality dividend growth stocks out there have been increasing their dividends for decades. Since inflation means the costs of life are sure to rise, you want to make sure your passive income can keep up. And when you're invested in world-class businesses that are raking in ever more profit and paying out ever more dividends, you're sitting pretty. Plus, because these are world-class businesses, they tend to perform exceptionally well as investments over the long run. Summing it up, we're talking about safe, growing, passive dividend income and exponential growth in wealth. Of course, some high-quality dividend growth stocks look better than others at any given time. Today, I want to share with you my top 5 dividend growth stocks for August 2021. Ready? Let's dig in. My first dividend growth stock pick for August 2021 is Amgen Inc., stock ticker AMGN. Amgen is a global biotechnology company. Amgen has a market cap of $139 billion, so this is a very large healthcare business, and why wouldn't you want to be exposed to a large business in healthcare? With the world growing larger, older, and wealthier, you will only see more older and wealthier people paying up for access to the best healthcare they can buy. That's played out in results. Amgen has compounded its revenue at nearly 6% annually over the last decade, while earnings per share has a compound annual growth rate of 13.18% over that period. As you might imagine, that bottom line growth has led to a lot of dividend growth. Amgen has increased its dividend for 11 consecutive years, and their 5-year dividend growth rate is 15.2%, which is super impressive. With a payout ratio of only 58.3%, the dividend is easily covered. Plus, the stock yields a rather healthy 2.9%, which is more than twice as high as what the broader market yields. All of this goodness comes in a fairly inexpensive package. The price-to-earnings ratio is 20. That beats the market. It's also well off of the stock's own 5-year average price-to-earnings ratio, which is slightly over 24. Our recent full analysis and valuation videos showed that Amgen could be worth about $262 a share. This one has some upside on top of the yield growth and overall quality. My second dividend growth stock pick for August 2021 is Clorox Co., stock ticker CLX. Clorox is a global manufacturer of a variety of everyday consumer products. Clorox owns a number of leading brands, including Brita, Burt's Bees, Clorox, Glad, and Kingsford. This brand power, combined with the necessity of many of their products, is a powerful 1-2 punch. They've compounded revenue at almost 3% annually over the last decade, while earnings per share sports a compound annual growth rate of nearly 7% over that time frame. They won't wow you with growth, but this company just steadily moves higher over the decades. The dividend has also moved higher over the decades. Yep, Clorox has increased its dividend for 43 consecutive years. You don't build that kind of lengthy track record without doing a lot of things right. And with a 10-year dividend growth rate of 7.5% that comes along with the stock's market-beating yield of 2.6%, you're getting a pretty nice combination of yield and growth here. Their payout ratio at 64.4% indicates no trouble whatsoever with the dividend. With the stock down 10% year to date, this name finally looks appealing again. Clorox is a stock that's looked expensive to me for a while now, but after some recent relative underperformance, I'd argue it should definitely be on your radar. The price to cash flow ratio of 14.2 is quite a bit lower than its own 5-year average of 19.3. We put together a full analysis and valuation video on Clorox not long ago showing that shares could be worth over $193 each. Consider cleaning up on this stock if you haven't already. My third dividend growth stock pick for August 2021 is Huntington Ingalls Industries Inc., stock ticker HII. Huntington Ingalls is a major American defense company. With a market cap of $8 billion, this one flies under the radar when compared to a lot of other defense contractors, but don't let their small size fool you. They pack a serious punch. Revenue has grown at a compound annual rate of 4% over the last 10 years, while earnings per share grew at a compound annual rate of nearly 25% over the last 9 years. You know what else is growing like crazy? Yup, the dividend. The dividend, which has been increased for the last 9 consecutive years, sports a 5-year dividend growth rate of 18.6%. That double-digit dividend growth comes on top of the stock's market-beating yield of 2.2%. This is a very strong yield and growth combination here that is pretty difficult to find elsewhere. And with their low payout ratio of only 27.5%, the dividend is in a great position to continue growing at a high rate for years to come. Surprisingly, this stock looks undervalued. It's up 25% year to date, so the secret is out of the bag a little bit. Still, this name should be a lot higher in my opinion. Our recent full analysis and valuation video showed that this name could be worth slightly over $232 per share. With shares trading hands for $205 each, I see some value here. My fourth dividend growth stock pick for August 2021 is Johnson & Johnson, stock ticker JNJ. Johnson & Johnson is a multinational healthcare conglomerate. As with Clorox, Johnson & Johnson won't knock you over the head with humongous growth rates. Instead, this is a classic blue chip stock that consistently inches higher in the same way the sun rises and sets every day. Revenue has compounded at an annual rate of nearly 3% over the last decade, while their earnings per share has a compound annual growth rate of more than 5% over that time period. What's more impressive than the size is the consistency. It's a steady eddy move upward over time. That consistency has translated over to the dividend. Johnson & Johnson has increased its dividend for an incredible 59 consecutive years. If you want to sleep well at night knowing that your passive income is going to be there for you in the morning, this is the kind of foundational stock that one can rely on. Their 10-year dividend growth rate is 6.5%. The stock yields 2.5%, and the payout ratio is only 44.4% based on this fiscal year's guidance for adjusted earnings per share. Just solid numbers across the board. The stock is up 10% year to date, but I think there's more to come. I'm not saying this stock will make you rich overnight or even a year from now. This is a long-term investment. You buy a Johnson & Johnson because you want to store it away and let it compound for you for the next 30 years. That said, with a forward price earnings ratio of 18, based on the midpoint of adjusted earnings per share guidance for this fiscal year, the stock is relatively inexpensive, and that could be a near-term catalyst for this name to move higher. My fifth dividend growth stock pick for August 2021 is JPMorgan Chase & Co., stock ticker JPM. JPMorgan Chase is a financial holding company. Well, with $3.5 trillion in assets, I'm underselling it a bit. This is a massive global financial institution with a storied history that dates back to 1799. Even after centuries of doing business, they're still managing to grow at a rather convincing rate. The revenue has a compound annual growth rate of 2.32% over the last 10 years, while earnings per share has a compound annual growth rate of 7.9% over that time frame. And that's even after using fiscal year 2020 as the endpoint for the 10-year comparison, which makes the numbers look a lot worse than they really are. Truth be told, the growth is quite strong. The dividend growth is also quite strong. The bank has increased its dividend for 10 consecutive years, and that's about to be 11 since they've pre-announced an upcoming dividend increase with a 5-year dividend growth rate of 15.4% and a yield of 2.6%. There's a lot to like here in terms of both growth and yield, and the dividend remains protected and covered by a low payout ratio of 31.7%. This stock is up 20% year to date, but the valuation remains quite reasonable. The price-to-earnings ratio of slightly under 10 is ludicrously low. However, earnings are being juiced by the release of loan loss reserves. That said, our full analysis and valuation video, which we put out only weeks ago, reveals how shares could be worth almost $165 each. It's currently priced at less than $152 a share, so I see a favorable gap between price and value here. This is a name that I think dividend growth investors can bank on. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did. And let us know in the comments what you think about these top 5 stocks for August 2021. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.